Hey everyone, Eric here with a really fun video about my evolution as a trader. So I'm going to go through where I started, how and why, and how that's evolved over time to where I'm at now. Now, a couple notes. Looking back at some of this stuff, I would definitely do things differently. I'm very thankful that I started early, but I think there's better ways to go about some of the stuff that I was doing. So I'm sharing what I did because it's what I did. This is in no way what I think to be the optimal approach. And I'll go through some ways that I would refine what I did, knowing what I know now if I were to go back and start all over again. So let's jump over and take a look. So I started trading in 2007. I was still in high school. And like a lot of people, I grew up with a single mom. She was working two jobs, just trying to make ends meet. So I wanted to find ways how I could add value to the family, give back. And then also, I saw how hard she worked. And I was like, I really don't want to do that. I'm hoping there's a better way out there. So while I was in high school and junior high school, places like that, I was working jobs here and there. I used to split wood. I worked at a local market. They did like a seasonal Christmas tree thing, made really good money there actually in tips. Worked at a bowling alley, stuff like that. And I just saved my money. So my father figure, who is separate from my mentor, but he is really what got me started in investing, he essentially said, have you thought about investing? And I said, no, I don't even know what that is. So he planted the seed in my mind. So I started doing just a little bit of preliminary homework and I ended up opening up an account through him and essentially starting there. I threw in $3,000, which is pretty much all I had at the time. And I got started with some buy and hold. Now, I think that this approach is good. I'm glad I did that. Looking back, I would change it just a little bit. One, I absolutely would be instituting covered calls early on. I think that was a missed opportunity, but I didn't know anything about derivatives at this exact point. The other thing is, I think I was picking a lot of individual stocks, which again, overall it's fine, but it's not optimized in my opinion. So I'm being very critical here. I think it's still, I would rather do this and start than not, but I was picking too many individual stocks. I should have concentrated what I was picking a little bit more and just built up slightly larger positions, but I was scared to lose money. This is all I had, worked hard for it, didn't know, when I would be making more, that kind of thing. Didn't have the perspective. And the other thing is, I also think if I was going to go with buy and hold, I should have done maybe just an index ETF, SPY, IWM, and then put most of my money in that, maybe $2,000 of that 3,000, and then use $1,000, to buy some individual stocks. But again, just being very nitpicky, but I think that's still important to mention because hopefully other people can kind of catch some of this and learn earlier. And like I said, improve their final product long before I did and accelerate their learning. Of a funny note, though, I was looking back through my transactions. I literally went all the way back to 2007. I was looking at different times. 2007, 2008, I was buying a lot of bullshit, to be honest. But I came across a couple funny ones. So I got Disney when it was $33. I bought Amazon when it was $131. I got Apple at 224 before the split. But if you look at the size, is three Apple shares. I was just trying to buy different stocks. I didn't know what I was doing. But then I started, aggressively saving. Cannot cannot overstate that enough. That is just so freaking important early on. And even during your aggressive growth stage, which we'll get into in a minute, aggressively saving. I would say when I was like 28 is when I really started spending some money. I used money before that to do some angel investing as I had some capital and then also for some properties. But other than that, I was not spending money and saving as much as I humanly can. So I feel like that's an important note here. So then let's talk about the evolution. So I was buy and hold. It was working well, and I was too damn impatient. I wanted to make more money faster. So I was trying to figure out what I could do. And that's when I started really learning about things like day trading and I got exposed to derivatives. What I have here is a screenshot of one of my earlier options plays that I just get a kick out of. So it's a covered call. That was one of the very first strategies I was deploying, but this was in Nuon. And at the time it was trading for like 1635. I think today it's like $50 or something like that. But I don't know. I got a kick out of it because I was stoked on my 75 cent premium on those options. Just entertaining to me. But anyways, I was buying and selling equities really expensive. It was too expensive for my small account at that point in time, even as I was starting to save more money. So that's what got me into derivatives. So starting to talk about options, not so much futures at this point. I didn't get into futures until later in college. Um, and it's just because the leverage, they didn't have the micros at the time. And this is an important note. I don't intend to go necessarily super far into detail on why the gap year is there. Essentially, just there was a backup in the Marine Corps training. So once I graduated college in 2013, I had a year before the Marine Corps was ready to take me into the next, stage of my Marine Corps career. So I did a few things. I wanted to be productive. So I started a master's degree and I was working at a local Marine Corps Reserve unit to get some experience. But most importantly, I just buckled down big time on my derivatives world. So I was already trading derivatives for some time at this point, but it was very superficial. I would argue that if we're talking about an iceberg, right? I was just seeing the top of the iceberg. I did not even know that the majority of the iceberg was underneath the water and I wasn't seeing it. So I took this time to really, really dive in. And this is where I was interfacing the most with my mentor. This is the guy that I often refer to. He does not want to be named. So that's why I respectfully refer to him as my mentor to give him the credit he's due. But he doesn't want any, publicity. So that's why he's referred to as that. But, anyways, it was almost like a second major for me. I was spending at least 6 to 8 hours a day on this stuff, legitimately. And I was consuming all media available. There was a lot of limitations because the internet was, there. I'm not that old. I'm 30, but it wasn't as evolved as it is now, and it didn't have the amount of information that we see now. So I was reading a lot of books and magazines and stuff like that. One of my favorite books, Options as a Strategic Investment. I had this. I actually didn't give it the read through that it deserved, though. It wasn't until I was working more with my mentor that we were like deep diving that book. It's kind of a tough book. It's like a textbook. But I was consuming as much as I could. So what that led to is an evolution in my understanding, but then also a critical experience for me, which was my largest loss I've ever made. So like we talked about a little bit, I think the start was okay. Could have changed a few things. And then when I first started trading derivatives, I had that early success, which, as most traders know, is actually kind of a bad thing because we think we know something. The Dunning Kruger effect comes in live and well. I'll link to a video up on that. That is big here. But essentially, all of that learning that I did mixed with some of my other experiences and then some success, it led to my largest loss. So I ended up putting on a really wide spread in the rut and it cost me $30,000. It was a $30,000 loss. I've had bigger gross losses throughout my career, but as a percentage of my account, this was the most meaningful slash biggest. And that caused me to kind of reel back and really start diving in. So that's where you see a lot of that deep dive experience that I went through. So I went through a phase where I was deciding how was I going to react to this? Was I either going to stop and do something else, go back to buy and hold, or try to fix it? And I decided to try to fix it. And the reason was because the trading success meant something to me because I knew that there was a possibility to make money. I just knew that I wasn't accurately or effectively deploying my capital. So I decided to go through that rigorous learning phase. And that led to essentially me and the development of what I would consider my edge because I'm not a super directional trader. I do trade directionally, but that's not my main, the main feather in my cap. I think that my primary edge comes from something that my mentor talked a lot about, which is trade management, understanding how to manage money, how to manage a portfolio. And over time, adjusting trades so that they're something productive, even when intermittently they're not productive. And that's really how I deploy my core portfolio. So, for those that don't know, I like to split my portfolio up core, speculative. Core is the main bid for success. I have a video up on how I like to split my accounts out. But essentially, the core allocation is how I'm expecting to make my money. So, What I did was really focused on deploying my capital as efficiently as I could after I went through this rigorous process where it was almost like a master's thesis that I went through with my mentor, where I went through my entire trading plan, my strategy outline, how I was going to log my trades. Got a video on all that as well for those that need that. But realistically, that was one of the most important things I could have ever possibly done because it forced me to truly sit down, get familiar with what I was doing, and develop a plan, a written plan. And then it was scrutinized by him, fucking hell, more than I can count. But what that did was created a much better product. Steel sharpens steel. And that's exactly what he was doing. He didn't hold anything back. And it's not because he was trying to be mean, it's because he was making me better. So that led to really the main life of the portfolio being aggressive growth. I was trying to deploy as efficiently as I could and make the best possible returns I could. My lens at the time was if I'm actively trading, I must outperform the market because what else is the other point here? So I was very familiar with leverage. That's what got me started into futures and other markets. And I went through kind of a very aggressive growth stage. And then I would say maybe 2, 3 years ago is when I started changing a bit. I was going more to consistency and starting to prepare my account for drawing on it for income, supplemental income or, temporary income, whatever. And this is where I started developing my new goal, which I talk about all the time, which is at least 15% per year. And then next year, actually, I'm probably going to move that down a little bit, maybe to 12% or 10%. And really, all I'm doing is focusing more and more on consistency and still capital growth because 10 to 12% a year is still fantastic. But it's just not the same level of aggressive growth that I was looking for a long period of time. So overall, I think about my trading career in a few phases. I started with buy and hold, then I started actively trading equities, then I started actively trading derivatives. And then once I went through kind of those first three stages of learning almost, that's when I went to this really concerted growth phase. And that's an important stage because that's where I was able to do most of the capital development coupled with a shit ton of money saving. I can't overemphasize that enough. This wasn't just, using the account to build money, which was the primary goal, but I was saving as much as I possibly could. And then when I started focusing more on consistency, income, things like that, that's where, I am using money in different ways. That's when I started getting a little more into angel investing, getting a little bit more into real estate and things like that. I bought my first house early on, but I started looking at, rental properties and things like that. So when I think about the evolution that I had, I think that if I could have gone through that true learning phase earlier, and all I needed for that was my mentor. Unlike a lot of people, I didn't need to, make all these stupid, unnecessary mistakes. I just needed somebody to help show me the way. And that's really the whole purpose of this YouTube channel is to help other people identify some of this stuff so that they don't have to make stupid ass mistakes like I did. Because even that $30,000 loss by itself at a 21% CAGR over, a period of time, that's a meaningful amount of money that I just pissed away. All in all, it was a necessary experience for me in the way that I went about the market. But again, my point is by sharing information with one another, hopefully we can reduce the amount that other people need to lose in order to, learn how to be productive. We all are going to lose money. It's part of the system, part of the game. But the idea is to limit those losses as much as we can, especially early on, because early on they can be catastrophic. That $30,000 loss was close, and that would have caused some serious issues for me if the rest of the year wasn't going well and things like that. But so that's my evolution as a trader. I definitely made a lot of mistakes throughout the journey, but I think that it's been really meaningful and overall it's been very educational to me. And that's again the whole point of doing this YouTube channel is to try to help other people learn one from, my experience and my mistakes so that they can be better without making the same mistakes because that is such an awesome scenario. I'm really happy with where I'm at right now. So to share some of that information with somebody else and watch them be even better earlier. How cool is that? That's what this is all about. So as always, if there's any questions or anything anybody wants to see me go over, let me know. Hit me up on Twitter at ESInvests. And if you like the videos and stuff, let me know because that's what helps guide the content going forward. I always say it's a user led channel, and that's on purpose because I want to cover the stuff that helps you all. All right, until next time, be an outlier.